things look a little calmer. The futures picture looks a little calmer, certainly in the US. We could see some volatility, but actually around earnings, a bit of tariff news here in Europe. But US futures do look a little calmer than they have looked. Is this calmness or is this just exhaustion?
It is just exhaustion. It's always tough when you kind of oversimplify the market, but basically there are people that have just lost too much money and they're feeling broken. It's not the time where they've got the appetite to be greedy or want to be a hero. And then there are those who've got this roughly right, and they know that, hey, they've got ammo in their pocket, and this is a market that will continue to provide a lot of volatility in the months ahead. So wait to the next trigger, wait to the next opportunity. Right now, with a shortened week around the holidays, the fact that we're waiting for kind of the next steps on tariffs means there's no reason to rush back into the market. The underlying trends that we've been talking about since January remain very clear. They look quite extended in the short term, so it's very awkward. You've got a short-term time span where you're like, hey, the really logical fundamental trades that are going to work for the next couple of years, they're overextended in the short term. So do you wait for the pullback or do you chase them aggressively now? I think most people are saying, I'm exhausted, I'm tired, let's go through Easter or the next big trigger, next big news headline, and not chase.
Where does the dollar fit into that, Mark?
As you know, Guy, I think dollar has started a long-term depreciation trend in January, and I think that continues to be the case. But the dollar is the one that's probably been most persistent. I think it's a soft into the Bessent meeting with Japanese officials, because there is that speculation. I think your previous guest, Jane Foley, outlined that any Japan deal, and they'll be likely to make a trade deal, would involve a slightly stronger yen. While that's very logical, and I actually kind of agree in that theory, I think there's going to be disappointment those who are speculating some short-term announcement on anything meaningful in the yen. They might allow the yen to appreciate, but they're not going to do some big grand deal. So I think that what we could see is dollar stay roughly soft until then, and then it maybe bounces after then, kind of wears off some of the oversoldness. But overall, this is a market where the dollar is in a long-term downtrend, but it's just overextended in the short term.
Mark, does the dollar follow the moves of the Treasury market?
Look, I think that the Treasury market is a super interesting component here, and I expect that we'll see Treasuries come back under pressure again. I do believe that Bessent could not say anything else, but I don't think that his comments are particularly game-changing. We've got a whole world that is very exposed to US Treasuries and worried about the policies of this administration, worried about what they might do next, and ultimately people want to lower their exposure to those Treasury markets. If you add in the fact that it's expected that we'll see some aggressive tax cuts and an increase in the fiscal stress in the months ahead, I expect long-end Treasuries to sell off again this year, perhaps significantly at some point. But short term, I'm not particularly worried. I think it is calm for the moment. The market is functioning. It's a longer-term story.